Hello, this is Steve Swanson with themarketforecast.com. We've had a lot of questions recently about what to do in this current market condition where markets keep falling and profits keep dwindling for those people who keep trying to play long positions. I thought I'd show you today what we did, plays that I made today that would be helpful if you follow the pattern that I'm going to suggest, especially using the cycle system that we use with the marketforecast.com. Let's start by looking at the IWM. Now that is the Russell 2000 ETF. Its cousin, if you will, is the Russell 2000 futures contracts, which I like to trade, but let's start off by looking at the IWM first. As the day started, you could see that it did break down with a gap open, which doesn't surprise anybody considering that the longer term trend, if you put a 100 period moving average on a 5-minute chart, you'll see that the trend has been significantly downtrending over the last 2 days. In such a condition, you certainly don't want to trade against the trend. You're looking for opportunities to short into the trend. So we're looking for pullback strength for short-term rallies that will pull us back toward that trend, and then short the cycles that then move down from that point. In this case, we're using a 40-period cycle on this ETF chart. And that's consistent with what we're showing in the marketforecast.com website right now upon the 4 ETFs that we're following. We can use this same strategy for the futures contracts as well. But yesterday, coming into the close, we did run into a short. Now, the second average that we see on here, these green lines, is the moving average with a high and a low on a 13-period moving average. So we take the high of the 13-period moving average and we take the closing or the low for that 13-period average and plot them simultaneously. Now here we're using eSignal. You can use this on any other platform. But the most important thing then that we add to that is the cyclical condition. That cycle condition was turning down yesterday afternoon, starting at around 12:55 Mountain Time where we trade from. But we didn't play that short until it actually broke below the lower band on that 13 period moving average in a downward 40 period cycle. So we entered short here. This morning there was a beautiful gap down. Of course, that's always a risk trading overnight, that the gap might go the other way and you might be stopped out. But we did get that nice gap down, and we went ahead and took profits after we saw that the gap was going to be filled. But in the regular trading condition, you would wait until that 13.13 again is violated right there. We made more than that, but if you got out there, you made just about $1 profit, which is a little bit more than 1% for that trade for just a few hours of trading time. Now, we're not going to trade this long. We see that the cycles are starting to turn up right here. Now here I'm looking at a 26 period and a 39 period, and when I've got them both trending up together, that's a pretty good indication that we should have a rise. But again, I don't want to trade counter trend to the bigger downtrend of this 100 period moving average. So we're going to just take the short trades until that condition changes. So what we're looking then for is the period to top out, so the 40 period cycle topping out just about over here, and you can see that it topped out just ahead of that. We're looking for a breakdown through the moving average again, and we've got that. You can play it either to the inside of the band on the 13.13 or just below that, and our entry point was right here. And since we've got the downtrend here, we're breaking below the 13 period average, and we've got a downtrending cycle. We feel pretty confident about that trade, and we go ahead and make that trade and continue it until that cycle starts to make its low, and we start to see that we're getting below here and it's breaking up through the 13.13 again, and we decide to go ahead and take profits there. And so from about here, 76.59, to about here, which is about 76 10, you've got almost 50 cents of profit in the trade. So we're up to about $1.50 on the trade so far. And we know that there's going to be another rise. Do we play it? No, because we don't want to play the counter trend. And then once more, we're just waiting for that 40-period cycle to top out. And again, it happens at 12:45, excuse me, Mountain Time. And we're looking for a good entry point, breaking through the 13-period moving average. We've still got our trend down here, and here comes our trade. We go ahead and enter, and that's at around 76. And we come up here. It almost looks like we're going to get stopped out. If it does break above here after we've entered, you may want to consider stopping out, although with that cycle trending down, with the 13-period trending down, the likelihood of that is pretty small. It may just be a quick tick up. So you may want to put a $0.50 stop on that entry. But it does break down. It continues to break through here. So our entry point over here at around 76 continues right into the end of the day, where we decide that we'll close that trade out. We're just not sure how the morning is going to open. Why not take some more profits? So from 76 down to around 75.20, about 25 right there, we take our profits at the end of the day, and another 75 cents. And so for the day, we pick up almost $1 at the open because of the gap. We pick up another 50 cents here, and we pick up another 75 cents here for a total gain of $2.25 on the IWM for the day. Of course, when you translate that into what we did on the Russell 2000 futures, we ended up picking up about 13 points. And on the Russell 2000 futures, 13 points represents $100 per point, or $1,300 per contract. Quite a bit of leverage on those futures. Remember that a contract there only runs about $1,700. And when you can pick up almost $1,300 for the same time frame, you can see why we happen to love that trade. Anyway, we'll be talking to you soon. Steve Swanson from themarketforecast.com. Thanks.